right, welcome everyone who's here on the live session. Hello to everyone watching this. If it's not live, if you're watching on YouTube, you got another great week here. The last full week of May, and we're going into this week with some really strong analysis. I think we're going to have some great trades coming in, and we're going to take a look at that in a minute. But I just wanted to show you guys something real quick. This prop firm called Audacity. I recently was exposed to them, and I took a look at them, and they actually had a meeting with them, and they they really like they say they're the best prop firm, and I really believe that because what they have two different types of programs. So you can either go through kind of like a learning program right here, the hidden talents, and they teach you more about the markets. And once you go through that, then you can get yourself to a funded account, or you can just, if you have experience and you are a good trader already and you know what you're doing, you can jump right into a funded account, and it's a live account. So there's no challenges, there's no this, there's no that. As soon as you go in, you have the live account and you're ready for action. And every 10% of the account that you gain, you split the profit right there, and then they double your account. So you gain 10%, split the profit, double your account. Same thing, and it does that all the way up to $500,000, and then from there, you just keep going about what you're doing and keep trading and keep making that money. So if you guys are looking for a prop firm, I would look into Audacity because, like I said, they're real money right away. You get 500,000. You're not liable for the loss, and it's good prices. And they've been around since 2012. Okay, they've been doing this for 10 years. So, they're not like some new firm that popped up out of the middle of nowhere. They've been around for a very long time. One of the first funding programs out there actually for this industry. And yeah, so give it a look if you're into funded accounts. But with that being said, let's step into these markets. I'm just going to very briefly touch on Bitcoin, and then we're just going to work our way down this watch list. I believe Bitcoin has the possibility to pull back down into the area of where this wick was created when we initially dumped down into 25,000. This is just a markup. I'm not actually in this position at the moment, but as we can see here, price pulled back into where it dumped from, which has lots of sell order liquidity. And what I'm expecting is, yeah, simply what I have marked up. I want to see price pull back down in here, and that is because we had some buys along here, but it has failed to break above this resistance. And looking at it from a sell pressure side, there's lots of sell pressure building up around that 30,000, 31,000 area, and that leads me to believe that we are going to see this pull back down into here before we see any further upside movement. So I didn't need to do that. With that out of the way, we're going to start with two CAD pairs. We have EuroCAD, which is this chart. We have the Pound CAD, which is the next chart. And they're both pretty much the exact same, which is why we're going to be trading both of them. And let me show you what I'm thinking. So weekly time frame here, we have seen a very slow move downwards, very choppy, but lots of good potential. And what I'm expecting is based off of how this recent price action is on this weekly, I believe this next weekly is going to at least tap up into this area right here, and from there it is possible that we actually move and continue down even further. We will cross that bridge when it comes to it, and depending on the price action we get here, we will analyze that and see if we can take a short opportunity? Is it going to break? We're going to go long, right? But for right now, I just want to see this up in this wick tapped. So looking at the daily time frame, what I have marked is, or you know what, let me go to the 4 hour. So right up in here, this is why I want to see this area push down or hit before we push down. So to me, we pulled up into this level here, 1, 2, 3, and we dropped. And what interests me is we didn't break this. So we actually made a double bottom and we got a lot of bull pressure. We pulled back and we pushed and we made another higher high and then we made another higher low, right? So now we have 2 higher lows and 2 higher highs. And to me, this area right here is where lots of seller liquidity is. As you can see, let me zoom in here. As you can see, price hit this area, dropped a little bit, came back, went sideways, dropped a little bit, and before it actually fully dumped, you can see what happened is it pulled back right into this area and then it completely drained. So that tells me right in this area is a lot of sell orders. And it would just make sense if we were a bank and we were looking to take this to the downside. How could we profit the most off of it? And what you would say is, all right, well, let's buy it back to where our sell liquidity is, and that might turn people bullish, and that might give them buying, which would allow even more liquidity in the market. So as soon as price hits around 1.37, we can sell it, and it'll absolutely dump. And that's kind of what I'm expecting. My plan is to sell it once it gets up in here for sure. However, like I said, I am open to the idea of it possibly breaking that, because what I see is this huge. Let me paint this out. Again, before I draw this out, I don't think this is about to happen, but I just want to paint a picture of what could happen. If this does break, then this is going to be a very clear buy. Very, very clear swing buy. However, like I said, I would not switch my bias away from sells until this breaks right here, which I do not think is going to happen. So if our idea right now is sell bias from this area, right, around 300 some pips, because I would expect it to break this low, that also presents the opportunity of buying it up to that area, because that's about 150 pips. So we zoom in the 30-minute time frame and we look at what's happening here. And if we look right here, so pull back, nice little perfect pattern, pulls up in here, makes a nice wick, and what happens is it drops into this lower region, kind of stalls there for 8 hours, and then it explodes. And that is very similar to what I'm expecting to happen here. So I'm expecting these are the lows of this correction, and now we have this pullback up into here. And what I'm expecting is this next week open, because we need that wick on not only the new weekly candle but the next daily candle. And I believe that wick isn't going to be that large. If we go to the daily time frame, I'm not expecting tomorrow's candle to break yesterday or Friday's low. If that makes sense. So I'm expecting that wick to come down pretty much between Friday's low and this area that I have marked up. So let's go back to the 30-minute. So what I'm expecting, or what I'm planning, is I'm looking for I know this was already marked up, I'm looking for a long opportunity right around this area, right? Probably nice, even if it's a 4.5 to 1, 4.5 to 1 right there. Okay, 38 pip, 170 target. This to me makes the most sense. Probably put it right there actually. So this is really what I'm going to be looking for right here is a long into 172, and from here again I'm going to be looking to take shorts. We'll see how price accumulates in this area, and as long as it is looking correct for the sell, then we are going to be selling. And I'm specifically looking for it to take out this high right here, which is that is why my target is right there. So I really want to sell it right at or just above 1.37, and that would present a really nice short with decent amount of pips, upwards of like 300 to 400 pips. Right, so I mean, if we're breaking this low, it's probably going to actually break it, not just wick below it. So, we'd probably be getting, something like this, like an 8.5 to 1, even with a larger, even if it was a 50 pip stop, that's still 7.3 to 1. So that's kind of what I'm looking for Euro CAD. And we're going to switch back to the 2-hour time frame and look at essentially the same thing but with the pound CAD. So yeah, pretty much the exact same thing. So I'm not going to go into a ton of detail with this because it's literally what we just looked at. It's just a little bit different prices, a little bit different areas, right? The candles aren't exact, but same thing, right? As you can see, I'm actually expecting price to pull just below this level this time. So if you go to the daily, and let me get this nice and zoomed in here, I'm expecting this week's candles wick to come slightly lower than Friday's open, which is why I'm looking to buy it under that level, but I still want to have it marked. And then again, the stop loss, I don't think today's candle will break that low. So the stop loss is, at the low pretty much, or a pip below it. And again, the target is up there, 190 pips. And the same thing, I believe we're going to see that sell. And I want to see it specifically hit right here. Same kind of on the EuroCAD, right? This is right under these levels are going to be the first sell target where we look to take most of the trade off and move the stop loss deep into profit, because in my opinion, the most likely situation of if this is going to turn bullish would we pull into sell liquidity and we fulfill that liquidity, which makes price drop, and from there we stop out these daily lows right here, and that is where we would turn bullish from. So even if we're turning bullish here, I still think we're going to get this buy opportunity and then get the sell opportunity, and from there we'll address it and maybe take long from down here, which is why I have that marked up right there. Yeah, that's it for the pound CAD and Euro CAD. Let me just, yeah, I guess that's fine. As you can see, these charts are very similar. I don't know why it actually deletes all the drawings when I do that. It's kind of strange. And then we have the pound yen. Okay, so let's take a look at the pound yen. This is going to be one of those trades that is a swing trade. Going to be looking to hold this for quite some time. So let's get into it. Let me delete this. Last week, we analyzed the buy from 157.5, and the target was up in here, and that could not have gone more perfect. The market was right here when it closed. We actually took a sell at 159.2. The target was 157.5, and then this is where we looked to buy, and then from there it absolutely exploded. And again, that could not have gone more perfect. So we're looking to kind of repeat that this week. What I would like to see is the gap between the open of this candle and the low of this candle fulfilled. Not completely though. I don't think price is going to pull all the way back down to 158, but I do believe we're going to get below this low. Very similar to where is it? Where did I have it marked up? Why can't I find? Okay, okay. I'm zooming out way too much. Kind of like right here, how we have these wicks and it fills below it, and then it pushes up, then it goes sideways, right? Even, what I was considering is if it holds this level, very similar to right here, how it holds this level, there's a chance that we're going to buy off of the level because as you can see, it has multiple days of testing this level. And if we can see that it is not breaking it and the lower time frame looks like it'll buy off the level, then we will switch the analysis to buying off of that level. However, for right now, I do believe we are going to see um, this low taken out. So let's zoom in the time frame a little bit. You can see how it's already starting to box up right here, but to me it just makes so much sense if we were to pull right down in here. So what interests me is using this fixed volume and capturing all of these buy orders. And if you look at that, this line right here represents where, or the price that the most orders were placed at. And that is right under that wick, right? So this is a 30-minute, but this is that 4-hour wick that I said I want price to go under. Obviously, we have the low right here. So this is exactly what I'm talking about. I want to see price pull back into this area and fulfill more orders at this price point of essentially 158.6. So what I'm going to do is I'm going to mark a zone from the bottom of that candle pretty much down to the bottom of this candle, and I'm going to delete that out of the way. Actually I'll keep that for now. I'm also going to delete that out the way. So what I'm looking for is a buy on the pound yen within this area. Doesn't let me measure this. 40 pips. Okay, so at the definitely the lower end of this area. So let me go in the 10-minute time frame. Let me go in the 5-minute time frame. I mean that right here, even a 65 pip stop loss would be okay because the target is 800 pips. So that's still over a 10 to 1 risk to reward. I'm actually going to mark that. I'm going to use this. I'm going to mark this over here. So I want to see price come right under this line. And that is where I'm going to be looking to take buy entries at. Right at this line right here. And the target, we're zooming way out, but the first swing target is 167 essentially, which if I mark that out here, stop loss at the bottom, that is a 1 to 13 risk to reward. So even with a 70 pip stop loss, which is the very, very, very bottom right here, that's still a 1 to 12 risk to reward, which is huge. Which is, for these swing trades, my personal style, I use these larger stop losses because, it gives it a little bit more buffer, but also the target is so big that, the risk to reward of holding that position all the way up there is, it's worth it. It makes it okay. It makes it fine. So, zooming back out to the 4-hour, extend this a little bit. At some point, I want to see 158.6 hit, and from there we're going to take that buy entry, and I'm probably going to set a buy limit if I'm being honest, because I really see it just spiking that low, just hitting it with a wick on the 4-hour, and pretty much just full sending it up from there, which would be beautiful, absolutely beautiful. So I'm just going to keep it like that. And we have two more pairs I'm looking for this week. I'm looking at this week. One is the pound Aussie. I believe this is going to hit 1.81, and then we're going to touch on gold, and that's all I have. So let's look at the pound Aussie. We're going to zoom in. Obviously, you can see what I'm looking for, but let me show you why. So originally we had to sell because of all of this resistance. However, I believe that this is accumulating buy orders more than it's accumulating sell orders based off of the pressure and the structure. So I really do think a price is going to pull up into here, because that would also lead for a larger sell if price does hit this area and drop down. I mean, that would be like 1,000 pips, which is very possible. I'm gonna mark this low right here for the future. So let me zoom in now. Hold on. This is kind of, no, it's not that good of an example. All right, never mind. This is kind of a good example. No. All right. So we're gonna zoom way in, and let's put our eyes pretty much right in here. Okay. So yeah, right in here. Huge bullish pressure, right? 1 day candle, 300 pips, and then we go completely sideways for 2 weeks. Now, let's take our eyes right here and then just look up. And what's happening if we're looking upwards? We have this level here that was created, respected, 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 and this one actually stopped out these people. So anyone who bought in this area with their stop loss under that low got taken out, and that actually caused a huge shift or a huge push in momentum, and price pushed all the way up here. And then we take a look at these next 3 candles. So ignore this one. I want to talk or look at these 3 candles, or these 4 really. I'm marking the open of this candle and the low of this candle. And if we're looking to buy, what we'd want to see from, let's say at this point in time when price is right here, if we're looking to buy, we'd want to see price pull between these 2 levels and reject. And if we take a look, we have a 1, 2, 3, and then a push up, and then the market pushed it back down, because I'm expecting price to, what it's already done with the swap right here is create a wick, which it's literally, as you can see, it just did when the market opened. So let's go to the 2-hour, and this is exactly what I'm seeing or expecting. I was not expecting that to happen within the first 2 seconds of the market opening. However, that doesn't change anything. What I'm expecting is price to push out of this area and pull into 1.81, and it's as simple as that. Which, as you can see, it's already doing. So it'll be interesting to see what happens this first hour, because this first hour has major spreads, just like during swap. And that's probably why this gap is here, is because of the spread. Yeah, look at 15 pip spread right now. So this is 30, this 40 pips. So huge spread. But I'm not expecting price to move much lower than this. if it wants to push down and wick out, that's totally cool. I'm not even going to care about that zone specifically, but this level specifically is what I want to see price respect fairly soon. I mean, already right now, I don't really care what the first hour does because, like I said, the spreads are huge. The market just opens. It's kind of, market open can be a little weird sometimes, but in the next few hours, I want to see what happens here. And as long as we respect this and we do not break this over the next few hours, this is going to be a very good buying point, even as early as tonight. Like I said, a couple hours from now, um, looking to buy this stop loss 50 pips on this low right here. So this is that 1, 2, 3 on the daily. I don't think if we are going to buy, it's not going to break this low right here. Um, so that would be a 1 to 7 risk to reward. And yeah, that's pretty much all that's happened here. Because what I see is this huge push, and then we got consolidation mode. And, a safer route would be waiting for it to break and pull back. But a sniper route is, hitting it on the bottom of the daily. I actually did put a buy position in right here Friday with a very low risk. So I am, pretty much just above break even at that point. But I'm going to be looking to enter yet again right here once the spreads chill out. So give it like 2 hours, and then I'm going to be looking to take entry again. And that is it for the pound Aussie. As you can see, 400 pips to the upside, so a really good amount of pips to capture on this move. And let me just see what this looks like if we take a look at all the buy orders in this accumulation. We can see all the buy orders. I'm starting when they, you know what, I'm actually going to start it down here. Okay, same spot. As you can see, I just moved that. I'm starting at the low because that's when obviously the buy orders start stepping in, right? They're not going to step in while it's pushing down. That's why I'm doing it at the lows. And even this low, as you can see, there's actually a ton of orders up here. But as you can see from all of these, during this whole accumulation, all the orders are like right in this area, which is why if you saw a couple minutes ago before I deleted it, I had that zone drawn above here. It's because of that, because of the order line was right there, and I wanted to capture below that because I think we'll pull deeper than that. But I do not believe we're going to hit below this low right here. If it does, then it's possible that, it's just stopping that out. But it really does not have to, because it's accumulated for so long. I mean, I'm interested in seeing, let me change this to a 30-minute time frame. I haven't done this yet. I'm interested in capturing all of this instead of just this end part. Let's capture all of this. We'll see where all the orders are at. And would you look at that? So that makes perfect sense. By the way, this is the fixed range, or fixed range volume profile. It's right here. It's on the bottom. And if you've never used it before, as you can see, you click the tool and you capture all the candles that you want to capture. And what it does, I have it, the settings change so they're all one color. So you can, when you first use this tool, it does not look exactly like it looks on my screen. To me, I don't care about buy or sell because it's like you can't buy without selling, you can't sell without buying. I just want to see where's the volume at, and it shows you the volume. So obviously, the more, there's a lot of volume right here, there's a lot of volume right here, but right here is where most of it is, which, it just, everything lines up, which is why I'm looking to buy right in here. Once the spreads go out or calm down, then we're going to be looking to take that entry, additional entry. I'll give out a signal in the next 50 minutes. Once the spreads chill out, I will send the signal because I don't want it to hit with the spreads being so large. And that's it for the pound Aussie. We have one more pair to look at. That's going to be gold. Gold, we have a sell from 1845. The target, the first target is going to be down in this area, 1817. However, I intuitively believe that we are going to see 18.4 get hit. I am so sure of it. I'm so sure. I went way back in time in here and I found an imbalance right there, and it would just make so much sense. So before we look at what price is doing now, let's look at what it did before. We have a wick. We have another major wick. It pushed up. We have a low, another low. It pushed up higher than that high. Then it went sideways. And then it dropped. And you would expect, okay, it already made the wicks. It's going to drop right between these levels right here. And very possibly drop right here and spike this low out, and then it's going to explode. However, all right, now I'm hearing an echo, but I think this is Valdo. I'm muting you for a second, bro. Sorry. So right here, I mean, that looks so, it makes so much sense. Let me use a line. It would make so much sense to see this barely stopped out and then price explode. And as you can see, if we zoom in, it did get stopped out and it showed a little bit of pressure. And then look what happened. It absolutely drained, stalled for just a minute, and then it pushed up. All right, and then obviously a week or two of accumulation, and then we got another huge push up. And even within this accumulation, you know, enter here, take profit, sell, buy, maybe take profit here. It comes back down one more time. If I mark this low, we can see we barely stopped that out. We have wick, one more wick to stop that out, push up, right? But the main thing I'm getting at is right here. This push down and how we broke that low. I want to see that happen in this situation. So this sell right here, 600 pips. I mean, this might be, you know, like it might come down to this low right here. Look like it's gonna pull up, right? Make a higher low, whatever, and then just drain and then hit this low right here. And then maybe a little bit, and then dump. And then we're going to see an explosion, right? You guys get what the picture I'm trying to paint. So that, to me, I mean, this, from a technical standpoint, buying at this point makes a lot of sense because it already spiked, it dropped here. It already made huge spikes, and, you know, it's already up all the way up there. It just makes sense to buy right there. But intuitively, you know, just knowing gold and how it just likes to wreck everyone before it takes off, it just makes sense to me to see this low hit. And zooming back in time on the very small time frame, which if I change to it now, I think the candles, I don't know if it goes back that far. I don't think it has to pull back and stop this out. Even if it did, this is 40 pips from this bottom line to here. And I would like to enter just under this. So at like 183.1 whatever, it doesn't matter. We'll just 1783. The stop loss is going to be more than 39 pips or 40. It's going to be like 65 pips. So even if it does come down to this level, it doesn't matter. Ultimately, it wouldn't matter because, like I was explaining with the GJ, with these huge swing trades, because the target ultimately is going to be all-time highs, but the pips, the reward pips is like 6, 7, 800. So even if you have a 60 pip stop loss, 65 pip stop loss, it doesn't matter. Some people see that stop loss and they think that's huge, but you know, if your target is 120 pips and your stop loss is 60, then yeah, it's freaking huge. But if your target's 800, then it's normal. Risk to reward is the most important thing here. With all that, we already have a sell, and I'm pretty much looking just to. I mean, there's not any really further analysis. Nothing has changed at all since last week. I'm just looking to watch price drop and wait for it to hit this area. There might be a little buy opportunity in here in the mid range. There might be another sell entry opportunity in the mid range. But ultimately, I'm just looking to see it go from point A to B. Simple as that. It won't be as simple as that. It will chop around and it probably will present multiple different opportunities. Like right here. Wait, where's my level? Right here. We're probably going to be able to catch a little buy off that, even if it's 130 to 200 pips. You know, we'll come to that. We'll analyze that depending on how price moves about. But yeah, simply looking to go from here to there, and then if we go to the daily time frame and we make it look okay, then we're gonna go big boy move A to B, and this would be many weeks. Um, yeah, so honestly, it really could stop out 1780. So the move might be hitting that, but I'm gonna push this back up. 1784. We'll go light risk position at 1784, and if it goes to 1780, that's when we add the whole 9. It all depends really what happens at the moment of time, because um, if that's gonna be the bottom of a huge move, look at the style of price action. This is the 10-minute time frame. You see how like right here, it's stopping that out. It's stopping this low out, but it's slow. It's not volatile. It's it's just kind of pulled down in here. It's chilling, right? When it's gonna explode, when it's about to rip, it upwards or downwards, it'll go in the opposite direction really fast. I mean, we went from 1914 to 1890. We went 240 pips in 1 hour. Then we stalled just for a little bit, which this I actually remember buying right here. We caught this buy, and then it explodes right back up, and then it kind of slows down a little bit, right? And you can have other buying opportunities, or you just hold that one and wait. But that's kind of what I'm going to be paying attention to around here, because if we mark this low to down here, that's 240 pips, just like the last time, which is why I'm really thinking it's gonna hit right here, because what I'm expecting is price to kind of chill out here and stop that out, and then just rip down and then rip right back up, and then slowly over the next day or the rest of the week and the following weeks, we're gonna see that push up. The first major target is going to be up in here, like 1870s, right above this level. That's when we'll probably close a lot of the trade, because there's just going to be multiple more entries that we're going to be able to buy from. But we're not that far yet, so we're not going to get into that yet. We'll probably see that next week. I wouldn't be surprised if gold takes this entire week to move down here. And then the following week, we see that spike and we grab the 1780 liquidity. So I'm not expecting to like take this buy entry this week. I'm expecting it just to focus on this move down this week. And obviously, depending on what happens, I really think next week would be the huge spike because, whoops, um, whatever, I'll delete it. It makes sense to me to not have that third spike be 3 in a row. It's very possible, but I'm expecting. See, we have the spike, the stall, and then the real spike, and we have this spike. The next week we drop down here, maybe we pull back up. Like I said, probably some buy opportunities, right? So then we have a middle week, and then this week we see it smack down right in here and explode, and then from there we just see a nice trend upwards. And that's it. That's all I got. Let's have a good week. What is the pound yen doing? What's the pound Aussie doing right now? So you look at that. I mean, like I said, I don't really care about the first hour, but like it's already showing, it's printing wicks already. So there's definitely going to be a buy opportunity right here. Don't want to miss out on that. What is the CAD doing? The CAD's going to drop for sure. And volume profile. If we take, I'm just curious what this looks like. All of this buy pressure. So lots of buy orders, or lots of orders right up in here. It looks like, let's see, from this section right up in here. Okay, so it doesn't have, that's why I'm saying like it doesn't have to drop down here or any of that. That's why I want to buy just under here, because it's going to spike. It's a pound pair. Pound pairs spike like that. And I want the stop loss, yeah, right there. So, and if you can see here, look at the volume profile. Lots of orders here. But look right here, which is pretty much where I want to enter. I think it was lower than that. I think it was right here. There's actually, that's where the second most amount of orders are right in this area. So just keep that in mind with the pound CAD and Euro CAD. Same things. I'm just going to do this for the sake of it. This is the bottom. Lots of orders right there. Where's the second amount? A little bit above it, but right down in here, right? Lots of orders right in here. So makes sense. It makes sense. Lots of orders. That makes a lot of sense. So if you capture all of this, this is where the most amount of orders are. There's obviously a lot down here, but I don't think we're going to need to touch that. We're trending upwards. It doesn't need to come back down all the way. Just come down a little bit. Just needs a little wick. And yeah, that's it, guys. Let's have a good week.